This is Just Listen, hosted by George Goodman. Today is March 23rd, 2026. And today I want to talk about the U.S. federal government policy on oil prices during the conflict in the Middle East, and specifically this time with Iran. Now, talked about this and you've heard various people talking about it. The focal point for this is how much money would the U.S. stock market lose if we only traded with South American oil futures. So I did some research on this, and this is pretty interesting because we, the United States, is tied in so heavily with these global markets, and someone needs to bring it to the attention and to be clear and concise with it, because I had enough information for a 40-minute talk, right? But we need to hone in immediately on what the deal is, what the problem is. The bottom line is this: the U.S. is indirectly, through the U.S. stock market, tied into oil so effectively, and I'm going to make the case that countries in the Middle East actually can use that as leverage to get us to do stuff. So the U.S. stock market is valued at $69 trillion. One of the commodities, the big one that's traded, is oil or oil futures, and it controls the price of oil, because as we've seen in our own country, whenever we're talking about any kind of conflict, no bullets would have gone off or bombs, the price of oil goes up, and there has been a domino effect for the American consumer. So if we were to not be in oil futures, or the stock market got out of it, the people in the financial industry, because this is where I got the information from, said that we would have total market loss. So the New York Stock Exchange and the NASDAQ currently sit at 69 trillion. Well, they, meaning the stock market people who write these articles, say that we're so connected with oil futures that we can't get out of it. So they also say that the S&P is dominated by technology, healthcare, and financial services, and that these are tied into the oil futures and the oil prices too. So if we only traded with South America, now we have to look at the source. It is these financial magazines, and they are just speculating on what would happen. And I would submit to you, based on my research, we don't know what would happen. But here is what they say. If we were restricted to only trading U.S. and South American oil futures, it would trigger a massive contraction in global capital markets and fundamentally alter energy economics. Energy economics is a strong word that I found. Energy economics. That would also include precious minerals for electric cars. And it looks like, based on the evidence, that the stock market is trying to tie those all together. And if they do that, then we in the United States the common people are going to be stuck whenever there is a conflict in the Middle East, that we're going to be involved financially from the perspective of things going up. Now, so this hypothetical scenario, effectively a regional energy exchange would decouple the Americas from the global benchmark Brent crude, and likely lead to the following outcomes. So this is what the stock market thinks, and I'm trying to lead you to tie in certain things together. So what I'm trying to tie together is these global markets, the stock market, and the crude oil, and then they are saying that it would wipe out our economy if we got out of it. Now, and I'll tell you why I came to a conclusion here at the end. So if we got out of the oil futures in the Middle East and just did it with South America oil futures, they say there'd be a massive market delisting and capital flight, asset repricing, and regional energy decoupling, and margin calls, and microeconomic consequences, etc. So they have scared through the U.S. stock market, the global stock market, us, the United States, and common people filling up their tanks of gas with the notion that we're always tied to that. So why doesn't the U.S. stock market get out of trade in oil futures in the Middle East? So this was another article that I looked up, and it confirms what I said earlier. The U.S. financial system remains deeply integrated with the Middle Eastern oil futures because the region still controls roughly 20% of the world's oil supply. Now, keep in mind that the United States produces quite an amount of oil. Now, the production has actually gone up of oil based on the current administration. So we don't count on oil and gasoline, oil slash gasoline, to fill up our vehicles, because we actually get less than 10%, and I reported this last week or 2 weeks ago, of gasoline. The end product is gasoline and also plastic from the Middle East. And if you watch the reporting of the mainstream media, they directly tie the war with Iran and high gas prices to the conflict. And every conflict that we've had, if you think back to September 11th, 2001, that was done too. And if you look at how it went, okay, yes, there was gas, and someone decided that they thought that it was going to be a pretty intense and long conflict, follows what they're doing now, saying the speculators or people on Wall Street. I have no idea who these people are, but if they get spooked, the bottom line is stock market tanks, and as I have presented to you, we are so tied to that it affects our economy hugely. And all you have to do is look at the TV, follow the financial part with the U.S. stock market. So these oil futures, primarily because the region still controls roughly 20%, but to build on that, Key reasons for our involvement. Now, this is federal government policy. Global price interdependence. Even though the U.S. produces vast amount of sweet crude, domestic refineries are often optimized for the heavy crude produced in the Middle East. This requires constant trading to balance domestic needs with global supply. So we are involved in that. And we've got these economic buffers. Middle Eastern producers, particularly Saudi Arabia, maintain the world's only significant spare capacity. Now, I could go on and on about that. But here is the question that you have to ask yourself. In the Middle East, are their oil prices up? I don't think that they are. And I listened to the international news this week, and they don't talk about the high prices in their country. Do you know what they talk about? They talk about President Trump and his conflict. They call it a war in the Middle East and how it is affecting the U.S. They don't say anywhere else. One of them I watched mentioned China a little bit, but China gets most of its oil from Russia. And then they attacked the fact that the president had eased up sanctions against Russia so that they could keep the global oil supply, etc. But here is the bottom line for us in the United States of America. As a strategy for war slash conflict, and this is a conflict in my view, that's an opinion, we, the United States, have to figure out how to get out of or to lessen the impact of the global stock market being tied so heavily into oil. And I am the only person that I have heard talking about this. Why is this important for you? It's important for you because 5 years from now, 10 years from now, 20 years from now, we are tied to high prices with gas, even though we are not directly affected for going to the gas pump and pumping gas into our cars. The stock market is heavily tied to it. Thus, that makes us heavily tied to it. Now, for the discussion today, why is it that we are so heavily involved in the stock market with oil in a region that has been at war for over 100 years? And we will never ever be able to get gas prices low based on the conflicts going on in these nations. And can any one of us, and this is opinion part, say that even for our grandchildren, that when they become adults, that every time something happens in the Middle East, prices are going to spike in the United States and the stock market is going to make the American people lose money. And also, we're going to have high gas prices. And remember something too, just because the gas prices are high at this point in our discussion, someone is actually making a lot of money with the conflict. And the more important thing is the countries in the Middle East can use this, our own stock market, against us to influence our decisions. Because if you watch the mainstream media, the first thing that they do is say, yep, look, this is how it's affecting them. Look, the global prices are going to go up. And I would tell you, even if the conflict ended tomorrow, it will take them at least 8 months to bring those prices down, because that's controlled by the private sector of the US stock market and the global stock market, when those folks think that they feel safe enough to bring the prices down. This is Just Listen, hosted by George Goodman. Let me know what you think. Have a great day.